To become profitable with trading, it's important to know how much money is entering the market and how much money is exiting the market. Along with this, it's also important to know the quantity of these transactions, meaning the volume in the market. There is actually an indicator that takes into account both of these crucial market concepts. The indicator was created by a famous technical analyst named Joseph Granville. Granville believed that volume was a critical component of market analysis and that changes in volume could reveal important information about price trends and potential trading opportunities. The PVT indicator was one of his solutions to this idea. This indicator, also known as the price-volume trend indicator, measures the momentum of buying and selling pressure, showing us when price-adjusted bullish volume outpaces price-adjusted bearish volume. So in today's video, we will be showing you exactly how the indicator works and how it can be used to enter into extremely profitable positions. Let's first add the indicator to the chart. Head over to the Indicator Search tab and search for the Price-Volume Trend Indicator. Select the indicator made by Everget and add it to the chart. Now let's take a look at what the different components of the indicator are and how they work. The first component of the indicator is the PVT line. This is the main component of the indicator and shows us the price-adjusted volume. The most basic way of reading the indicator goes as follows. If the PVT line is red and moving in the downward direction, it indicates that there is selling pressure in the market. This means that the number of sell orders is increasing, and traders are willing to sell their shares at lower prices. So if this occurs, we can assume that the price will be moving in the bearish direction. If the PVT line is green and moving in the upward direction, it indicates that there is buying pressure in the market, meaning that there is a higher chance for a bullish move to occur because of the number of buy orders increasing and moving to a higher price. If you have used the PVT indicator before, you may have noticed that the current indicator we added to the chart looks a bit different than the original one. This is because this indicator is the newer and improved version that has a second component. This component is the signal line. As you can see, with the original version of the indicator, it was hard to tell when the PVT line was moving in the upward direction or when the PVT line was moving in the downward direction. However, the signal line makes it a lot easier to see when bullish or bearish pressure is entering the market. Now that you know exactly how the indicator works, let's take a look at how we can use the indicator. With the most basic method, whenever the PVT line crosses above the signal line, it indicates that the PVT line is moving in the upwards direction. This causes for the PVT line to turn green, showing us that buying pressure has entered into the market. The opposite is true when the PVT line crosses below the signal line. This indicates that selling pressure has entered the market, causing for the PVT line to turn red. A different method, which will usually be used by more experienced traders because of the increased accuracy, involves looking at the differences between the price and the PVT indicator. Here we can see that the price is making lower lows. This shows us that the price is in a bearish trend. However, if we take a look at the PVT indicator, we can see that higher lows are being made. This indicates that the selling pressure in the market is decreasing, despite the price of the asset continuing to fall. This divergence between the PVT indicator and the price action can suggest that the price of the asset is oversold and may be due for a correction. If we take a look at the price action after this divergence, we can see that the price indeed made a correction and started moving in the bullish direction. In this case, the price is moving in the upward direction, making higher highs. However, if we look at the PVT indicator, we can see that lower highs are being made. This means that the buying pressure is decreasing while the price is still rising. This divergence makes it likely that the price will make a bearish correction. As you can see, after the bearish divergence formed, the price indeed headed in the downward direction. Now that we know the different methods of reading the indicator, let's take a look at how we can enter into positions with the indicator. Let's first add some extra indicators to the chart to complete the strategy. Head over to the Indicator Search tab and search for the 10 Moving Averages indicator. Select the indicator made by Himanshu and add it to the chart. The final indicator we will be adding to the chart is the Volatility indicator. Search for the Relative Volatility indicator and select the indicator made by Verifid. Now let's change the indicator settings. First, head over to the Moving Average indicator settings and click on the Inputs tab. We will be adding 3 EMAs to the chart. This means that we will add one 50-period EMA, one 100-period EMA, and finally one 200-period EMA. Make sure to also change the colors of the EMAs to make it easier to see. Now let's change the PVT indicator settings. Click on the Style tab, after that change the opacity of the plots to make it easier to see. Finally, we will be changing the relative volatility indicator settings. Click on the Settings tab and navigate to the Style settings. First, we will be unchecking the 3 filters. Since we will only be using it to see the volume amount, we will also be changing the colors to gray. That was all that we needed to do. Now let's take a look at how we will be combining the indicators. We will be using the EMAs to determine the overall trend. This means that we will only enter into positions that align with the indication of the EMAs. Next, we will be using the PVT indicator to find the entries. The PVT indicator will provide us with the buy or sell signal. Finally, we will be using the relative volatility indicator as a confirmation to make sure there is enough volume in the market. Now that we know exactly how each indicator will be used, let's take a look at entries that can be made using them. We are currently looking at GBPAUD on the 15-minute time frame. Firstly, we can see that the price is trading above all of the EMAs, indicating that both the short-term and the long-term trends are bullish. If we take a look at the PVT indicator, we can see that the sellers briefly outpaced the buyers. However, we can also see that after a few candlesticks the buyers outpaced the sellers again, showing us that there is buying pressure in the market. We also see that this aligns with the price pulling back to the 50-period EMA before bouncing off it. Finally, if we look at the relative volatility indicator, we can see that the bar is greater than both the filter and the moving average. This means that there is sufficient volume in the market. All of these signals indicate that it's a good idea to enter into a position. So let's enter into a buy position. We will be placing the stop loss at the recent swing low. For the take profit, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. Here we can see that the price is in a downtrend. We know this because we can see that the price action is trading below all of the EMAs. During the downtrend, we see that the price made a pullback to the EMA. However, after the pullback, the price closed below the 50-period EMA again. If we take a look at the PVT indicator, we can see that the buyers were temporarily in control, overpowering the sellers. However, we can now see that the sellers are in control again. We can also see that during the most recent bullish overpowering, the volume on the volatility indicator was extremely low, showing us that there is not enough bullish volume for an uptrend to start. However, if we take a look at the relative volatility indicator now, we can see that there is a high amount of bearish volume in the market due to the tall bar with a greater value than both the filter and the moving average lines. All of these signals indicate that it's a good idea to enter into a position. So let's enter into the sell position. We will be placing the stop loss at the recent swing high. For the take profit, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. The indicator is also great for entering into reversals. As you can see here, we have added the Premium Lux Algo Reversal Zones indicator. For this strategy, we will first wait for the price action to reach the reversal zone. Then once this happens, we will wait for the PVT indicator to turn red, confirming the signal. If this occurs, we will enter into the position. We will be placing the stop loss at the recent swing high. For the take profit, we will be targeting a 2 times risk to reward ratio. If we wait for the price to reach the reversal zone and then enter into a position once the PVT confirms the signal, we can enter into extremely profitable reversal trades. If you are interested in getting access to all of the Premium Lux Algo indicators, then check out the link in the description to get 30% off. I hope this video could show you how the PVT indicator works, and how it can be used and integrated into different strategies. Keep in mind to always backtest strategies before utilizing them. Thanks for watching.